You've got us. It's Market Day Report. By the way, I've got Chip Nellinger waiting in the wings. We're going to break down some of these markets. I thought we'd start in a unique place, though. How about bean oil? And there's maybe a reason behind this. You know, we've watched bean oil on quite a rally over the last year or so, and up 45% year to date. Now, we're seeing a slight pullback right now in the August at 72.55. It's down 37. December trading at 70.76. It's down 18. But this is on the heels of, well, NOPA crush numbers that came out yesterday, and they were actually better than expectations. So again, we're seeing a little bit of a pullback here in bean oil. What about soy meal? These contracts have been moving higher now for 3 straight sessions. We're higher across the board. Does that spill over to soybeans? And the answer, not really. November sits at $11.99. We're in a dime trade range here. So we've seen quite a bit of movement over the past few days, but today just kind of tightening it up. We're down 2 3/4 cents. Let's look at the corn market, and corn still lower here, down 5 1/4 at 5.64 1/4. Trade range here nearly 11 cents. So again, fairly tight trade range in comparison to what we've been experiencing. What about the wheat market? Well, the trade range here is less than 30 cents, but 30 cents, 6.77, right on the dot here on September. We're a half penny lower, and we look at hard red, and we're trading at 7.17 3/4. We're down 2 1/4 cents. Trade range here 21 cents. Chip Nellinger is owner, Blue Reef Agri Marketing. I started in a unique place there with the bean oil, but we got those NOPA crush numbers. Was just kind of curious if that could carry over one day. It doesn't look like it.
Yeah, you know, I agree with you, Tony. It was a little bit of a head scratcher to me yesterday as well. I mean, the soy oil stocks number was way below even the lowest estimate, and the total crush number, by far a record, way above what was expected. Now, to the point of that, we rallied into it, especially in soy oil. Maybe we're seeing kind of a buy the rumor, sell the fact type trade in here, where they're unwinding some of the spreads featuring long oil, short meal. So you're reversing that a little bit today. But overall, longer term, very supportive on the demand side. I feel like the weather's part of this too. The bean market, is made in August with August weather. We're not quite far enough out in our forecast to get a good feel for what August weather's like. So it seems like the bean market is just kind of sitting here treading water a little bit. But I agree with you wholeheartedly. A little bit of less than ideal response to what should have been a really friendly crush number yesterday.
Okay, and then we've had the ethanol numbers come out recently from EIA, and they weren't horrible at all. Now, we did see a pullback in the ethanol exports, but this is, I think, looking at the kind of moving towards the end user here. Let's back up to the production side. Is weather still a factor?
Well, I think weather is 100% a factor, Tony, and it's unfortunately less than confident on this extended forecast. It's typical summer seasonal weather. It's a little bit hot, a little bit dry in some areas of the Corn Belt, but this high pressure ridge seems to be moving around a bit in the forecast. There's going to be rain potential on top of that ridge, featuring the far northern Corn Belt and maybe the eastern Corn Belt. So it's not a totally dry forecast. It's not the type of forecast that says, hey, we've got a massive crop coming, but in the same breath, it's not the type of forecast that gets the funds all excited about some dome of death sitting up and never moving and having to get, massively long this market and shoot us higher. So unfortunately, it's going to probably add to the volatility. Next 6 weeks, the weather still is highly determinant on where our yields are. We've been talking a lot about the demand. The demand's so good on corn and beans both. We don't have any margin for error below trend line. So 6 weeks of weather here still are going to be very important to the market.
Great points, Chip. Hang on, quick break. We'll come back in a moment. Speaking of demand, Have we lost demand in the protein sector? More as Market Day Report continues in a moment. Could it be that we are seeing demand, at least maybe not disappearing, but waning a bit on the beef side? That may be the only thing that explains 15 straight days of lower trade here. Live cattle futures, we're now down to $226.55. Trade range here, $4.50 on the August contract, and we're trading $3.57 lower. Now, we've been lower 5 straight sessions here on the feeder market, and I'm really just gathering when most of the contracts are lower. Now, we've had higher trade with the August and the September throughout the last 5 days, but for the most part, the general trend here is lower. And we've lost $5.35 right now on the August contract at $344.55. So are we losing demand in all proteins? And the answer may be no. Look at hogs. We've seen a strengthening back up here, even though we're right now unchanged on August hogs. We've seen demand continuing over on the poultry side as well. Chip Nellinger's with Reef Agri Marketing. Is it the demand that's really at the heart of the issue, this pullback?
Well, I think there's two things, Tony. Number one, the demand is always in question, right? And it seems like, I guess in my opinion, demand hasn't changed necessarily, but we've maybe added a little bit of supply. This break kind of coincided with us ramping up to a pretty high level relative to the last 6 months or a year, our imports of beef. And so I think that has something to do with it, maybe a little bigger supply to help cushion some of this big demand. I think some of it is also fund related. The funds had such a long position built up. They've made a ton of money in the cattle and feeder cattle market over the last 3 or 4 years. And you're just in a period here where they're taking some money off the table. That's exaggerating our move lower. I think this Brazil tariff news isn't doing us any favors today either. They exempted beef. So I think that was maybe a little bit of a disappointment and caused some of the aggressive selling here so far in the cattle complex today.
Yeah, and again, when we're talking about Brazil, we can be talking a lot of things. We could, obviously, they are a competitor, but things like ethanol here, that's been a big story as well in Brazil. And then we think of just the energy markets. Have you been watching what's happening there?
Yeah, for sure. The energy markets are still in focus with our increasing tensions in Iran. We've had a quick rally back here over the last week or so in crude oil, kind of knocking on the door of $80. But so far, it's not been the aggressive type buying that we have seen at the start of that Iran war. So there's still some optimism that we can get stuff flowing through the Strait of Hormuz. In my head tells me that might take longer than expected, but right now the energy markets, at least from a crude oil standpoint, are trying to take a reserved approach. Some of the products, the gasoline and the heating oil futures really are where the bull market is right now. So there's some structural problems and some shortages across the world. And the faster we can get the straits open and normal, the better that's going to be for energy.
I didn't want to leave this quote board yet, Chip, because we're seeing the front month at $79.44 and then less than $4 to get out to the December. We didn't see that at the start. We saw that big rally in the front months and the deferreds kind of holding back. So is this kind of giving us the idea that the trade thinks we're going to do whatever we're going to do for a while?
Well, potentially, and I think that's the fear, right? Initially, it was just expected with that big spike up in the front end that it would be over quickly. And now that we've taken the carry out of this market, there's really no difference from, the first several months of futures markets. To me, that's saying, hey, we've got some longer term problems here, and there's strong demand, and the supply could be an issue getting out of the strait right now.
And just to wrap up, you mentioned the bull, if you will, over on the gasoline side. It's been moving higher for 4 straight sessions here. Nat gas pulling back after 2 sessions higher, one more, and it's the diesel market and diesel futures moving a little higher as well. As always, Chip, great to see you. Chip Nellinger, owner, Blue Reef Agri Marketing, in the metropolis of Morton, Illinois.